Hey everybody, this is Richard. Today I'm going to be doing a performance review for April 2021, the second week that is. But before I do that, I'll go into the disclaimer. After that, like I said, we'll do the review of the Phoenix algo, and then we'll look at the other algorithms as well. But we're going to focus in on the Phoenix algorithm and the trades that it made, and then I'll provide brief comments on the other four systems as well. Before I do that though, let's go ahead and look at the disclaimer. So feel free to pause the screen if you need to. But basically what this is saying is that I'm not a CTA. We don't give individual advice. The algorithms are traded under a letter of direction. And so what that means is I'm not allowed to give advice, or especially any advice unique to any person's individual situation. But like I said, this is a risk disclosure for futures trading as well. So what that means is trading futures does involve substantial risk of loss. It's not appropriate for all investors. And then keep in mind that past performance is not necessarily indicative of future performance. So with that, let's go ahead and get started. All right, so this week I gave the algorithms an A- grade. The reason why I did that is the 10-year note did a really good job. It got in on the 14th of April, so that was a Wednesday, I believe. And after that, on Thursday, the 10-year rallied pretty strongly, and then it sold off. So the 10-year did do a good job. It's still in that trade, and yeah, the 10-year sold off a bit today, but we're still up quite a bit on that algo. The day trade algorithm didn't have any trades though, and so that's really the main reason why it's an A- instead of an A. There was one trade in particular that would have been nice if we would have captured, but then the momentum ES algorithm actually hit it out of the park again with 4 winners, and it didn't have a single loser. So that brings the run on that algorithm to 11 back-to-back winners. So with that said though, one thing I do want to mention too is that the results I'm posting here, that's as of today, Friday, at about 11:30 a.m. Eastern. So the reason why I'm doing the video a little bit early though is because we are only in one trade, the 10-year, and so it's true that by the end of the week we might, or by the end of today, we might be slightly different in the profit loss, but I think we'll probably be pretty close to this, and I wanted to get the video out done before the weekend. So the profit on a percent basis is 7.76% as of right now. On a dollar basis, that's 1,551 per unit traded. Again, the Phoenix trades on a $20,000 unit size, so that $1,500 gain equates to about a 7.5% gain. So let me show you some charts though, and then I'll also comment on the other algorithms too. All right, so as I mentioned, the momentum ES, that's the one that I'm going to start with today as we look closer at the charts. But it's actually had a really good run as the market's gone higher. And by the way, this algorithm is the momentum ES. It's actually traded in the swing trader, the Phoenix, the pro trader, and the crusher. So if you're on the other kind of legacy algos, you would have seen similar trades that I'm talking about here. But basically, this is a week review. So we're going to start on the 12th of April, which is right in here. And you can see that so that we were flat coming in on the weekend, and that's the main change we made about a year ago to this algo to reduce the overnight risk, or the over the weekend risk, is if it's in on a Thursday, it tries to get out on Friday, and then it won't rebuy on Friday. But we did buy on Monday and hit our small target right here for a nice gain. Then we bought on the 13th again, which was Tuesday, and so the market opened a little bit lower right here, but then it rallied, hit our target, and then sold off. So that was a really good trade for us because we were able to get out with a gain as opposed to possibly being stopped out, although I don't think we would have been stopped out. Actually, I think we might have. So yeah, so that was a great trade for us. And then that same day, on the 14th, on Wednesday, we bought at the close again. And it's kind of hard to see probably, but we bought right in here at the bottom of this candle, and then we exited right here. And so again, if you've seen these videos, you should be aware that every day has 2 candles on this momentum ES algo. And it does that only so that it can buy 6 minutes before the equity markets close. And so that's why it kind of looks a little bit goofy probably. But we bought on the Wednesday, got out with a small gain. And then on Thursday, we bought again at the close. And then today, Friday, we got out at the open. And so far, it looks like that was a great trade because the market has sold off from where it was. Now, there's still a few hours before the equity markets close, so it's possible that we rally here and then we missed out on some gains. But bottom line is we had 4 winners and 0 losers. And if just to give you a little bit wider context again, if we zoom out a bit, and if you remember the previous week review I did, we had an amazing week, and a lot of that was also because of this momentum algorithm. And so you can see, I believe I counted 11 winners before we had our last loss, which was back on the 30th of March. So I guess in April, we actually haven't had a loser yet. So that's pretty good considering we're at least halfway through the month. But anyway, so that's the Momentum ES algorithm. It did really good. I would definitely give this algo an A. When we look at the 10-year now, let me show you it. So if you've been following us for a while, you know that we haven't been in the 10-year for almost 2 months. So the last trade we had, we got stopped out on the 25th of February. The rest of February, no trades, and that was good. If you watch the other video, you remember me saying that this 10-year actually has done a pretty good job, because from where it got out, the market had traded lower. And so it's good that we got out. But, of course, we were kind of just waiting for it to stabilize a bit. And again, the algorithm does this all automatically. It's not anything that I do. It's in the code. But we did get into it again on the 14th of April. And that's this buy right here. So let me zoom in a bit and you can see what I mean. So with this chart, these are 120-minute candles. So every day has 5 candles, just to give you a little bit of a bearing. But we bought the day before yesterday, kind of at the open. And then the market rallied, the 10-year did at least, on Thursday. That's right here. It actually had a huge move, and this trade was looking really good. Then today it has sold off a bit, and it's down slightly from where it was, but it does look like it's stabilizing some. And a lot of times these trades, these 10-year trades, if you've been with us a while, you know that once we get into them, we tend to be in them for a while. So if I go back in history a bit, you'll kind of see, well, here's just a few from 2017. So here's a trade we got into, and we got out on the kind of the 12th of April. And this one, again, I kind of randomly picked it. But so this one we were in about 3 months. This one probably a couple months. And then, so it really just depends. If the market is really like spiking higher, like it did in the pandemic, like in March of last year, then what you end up seeing is, let me try to find it so I can show you. You kind of see, let's see, I'm not sure why I'm having a problem with this, but what you see in a pandemic is kind of this, well, not necessarily in a pandemic, we've only had one, but when the 10-year is spiking higher, when there's a lot of fear in the equity markets, kind of like you have here, again, this is March, we'll get in and get out pretty quickly, and sometimes we'll only hold for a day or two. But when everything is sort of running in a more steady state, then we tend to get into the 10-year and we can stay in it for a while. Now, we're relatively close to our target. Our target is fairly close right now, actually. But we'll see. A lot of times it'll move the target as well. So that's the 10-year though, and this I would give it an A as well, because we got in and it's up. So that's a good trade. Now, obviously, it would have been nice if we got in back here, but this is a momentum algorithm, so it's always looking for a little bit of stabilization before it gets back in. But the final algo, and this is the one that the reason why I gave us an A- is really only because this one, the last trade it had, this is our day trade long. The last trade it had was on the 5th of April, and in the previous video, I talked about it, a really good trade that we had, by the way. But after that, we didn't have any trades. This week starts on the 12th, which is right here. And if the market had gone sideways, I would say this algorithm did a great job because it didn't get in. But we did miss out on a trade right here that would have been nice because it was a gap up, and then the market really took off. And we were close to buying at that point, but we didn't. So, and again, the algo does this automatically, but because of this missed opportunity, that's I guess the reason why I gave us an A- for this week. But with that out of the way, though, let's go back to the other slide. Okay, so that covers the Phoenix algorithm, but if you are on the swing trader, your results actually were the same because since there were no day trades, and again, the swing trader is basically the 10-year plus the momentum algorithm, so your results would have been the same. The wave trader would be close to this, but I believe that the wave trader did not have the trade that we got out of this morning. So, but it should have seen a couple winning trades on the momentum ES along with the 10-year. If you're on the crusher, that algorithm actually is up the same on a dollar amount, but of course it trades on a 30K unit size, so the percent would be slightly different, a little bit lower, but again, the dollar amount's the same. And if you're on the pro, then your results on a dollar amount would have been higher because you would have had all these trades plus an additional 3 winners, I believe, on the Geronimo algo. So the other algorithms, this is a month where, or I'm sorry, this is a week where the other ones did pretty much as good as the Phoenix, with the exception of the Wave Trader, which would have done just slightly less. So that, I think that covers everything. But if you have any questions, we'd love to hear from you. You can feel free to email me at sales@algorithmictrading.net. I get that email, or you can also just email me at richard@algorithmictrading.net. But again, I just want to summarize that overall we had a great week, and this marks the second week of April. The first week was really good, so we're off to a really amazing start in April, and so my expectations moving forward are that the results that we'll either at least maintain the results or add to them. I know it always feels a little scary when we're up just because nobody wants to lose the gains that we made. But the reality is usually when we have some gains, that tends to carry over and spell good news for us moving forward. So I still have a really strong expectation that we close out April even better than where we are now, but that in May, June, and possibly even July that we add to the gains and get a good kind of 3-month win streak, maybe 4-month, and of course maybe higher. But in the end, I want to be clear, I don't know. There is risk in futures. No one has a crystal ball. There's no perfect algorithm. We will see losses again at some point. But certainly we want to celebrate the good results that we've had the last couple weeks. With that said, though, I want to leave you with the disclaimer again. Just remember, there's substantial risk of loss in futures trading. It's not for everyone. It's not appropriate for all investors. But if you are looking for an alternative investment vehicle or kind of an automated trading system, then for sure, I think we've got a great product, obviously. But yeah, remember the risk disclaimer. And of course, past performance is not indicative of future performance. And with that, I'll sign off. So have a great day. Bye-bye.